Okay, everyone, thanks for waiting. My name is Madison Briggs, Senior Marketing Coordinator at CB Insights, and I'll be kicking everything off before we turn it over to Oliver for the presentation and Q&A. Before we start, a few housekeeping items. All attendees will be muted during the event. There will be a Q&A session after the presentation, and we encourage you to submit questions via the Q&A tab in the Zoom toolbar. Don't worry about taking notes. We'll be sending the slides and the recording within 24 hours of the webinar. And finally, if you have any technical difficulties during the webinar, your best bet is to reach out to the Zoom Help Center. So a little bit about CB Insights. Our technology insights platform provides companies with comprehensive data, expert insights, and work management tools to help them drive growth and improve operations with emerging and established tech. Overall, helping our clients make smarter decisions for their tech strategy. If you're interested in doing a free trial of our platform, which we will be showing different points today, click on this link that I'm sending in the chat. And if you're a client and have specific questions about what you see today, feel free to reach out to your dedicated customer success team. So we have Oliver Yu presenting today. Oliver is an intelligence analyst at CB Insights, where he produces data-driven analysis and research reports on trends across the fintech industry, with a specific focus on banking and insurtech. I'll now hand it over to Oliver to begin the presentation.
Thanks, Madison, and thanks everyone for joining us today. To orient the audience, we'll be going over three main takeaways and some data points from our Q3 21 State of FinTech report to support them. So the first is that FinTech is eating the world. It's a slight modification to Mark Andreessen's 2011 declaration, but still we believe to be true nonetheless. Second is that a risk-on environment is driving a flood of capital into FinTech markets. And then lastly, we'll discuss how FinTech playbooks are borderless. So let's get started. FinTech is eating the world. There's never been more capital supporting this wave of innovation. Similar to last quarter, 1 in every $5 of venture capital is FinTech. In this quarter alone, we saw funding increase 147% year over year to $31 billion. This represents the second largest quarter for FinTech funding. And just zooming out a little bit to the annual view, so far in 2021, global funding has reached $95 billion, a 96% increase from all of last year. And we still have a quarter left. If funding keeps pace, 2021 will end with more funding than the prior 2 years combined. I'm going to talk about an inflection point. And deal activities also surpassed last year's 12-month total, reaching 3,549 deals. So not just funding that's increasing, so is deal activity. And one fascinating development is not just that FinTechs are unbundling traditional players, as has been the narrative over the last decade, but rather the rebundling from these initial FinTechs that are kind of disrupting the space. They're increasingly rebundling their offerings and becoming more and more like the incumbents that they sought to disrupt. Today, competitive lines are being redrawn. As any corporate strategy or innovation team can attest to, the competitive set of today's landscape is constantly expanding, with big tech lurking around the shadows, new entrants landing and expanding their products. The threat is changing and ever shape-shifting. And this is especially true in financial services. And take some of the most well-known financial companies around the world, Amex, Visa, MasterCard, and Citi. Not only are they trying to compete with each other, but it's increasingly facing intense pressure from new entrants, including PayPal, Stripe, Affirm, Adyen, all of which are adding new capabilities to deepen existing customer relationships and growing their market share. Right? And that's just scratching the surface. The same is true of wealth management and retail brokerage providers, which like E-Trade, TD Ameritrade, and Charles Schwab. This industry has seen significant consolidation as well as intense fee compressions over the last several years. And a major impetus for this has been companies like Robinhood, right, that took the market by storm, bringing fees down to zero. And now we have Coinbase that recently went public, focusing on an entirely new asset class, right? And without these players, there's really little impetus for the innovation and democratization of retail brokerage that we're seeing today. While we're on the subject of Coinbase, One of the most stark observations from this quarter was the explosion in activity from the venture arm of Coinbase. So top of the charts, Coinbase Ventures invested in 22 companies in Q3 2021. That's more than the next 5 most active CVCs this quarter, right? And these are no sleeping giants, right? It's Salesforce Ventures, Mass Mutual, Citi, Amex. They're all actively engaged in the ecosystem, and yet Coinbase is far outpaced their activities, right? On its website, Coinbase Ventures says the following: Coinbase Ventures invests in companies building the open financial system. We believe that multiple approaches are healthy and good. Our goal is simply to help the most compelling companies in the space flourish. Essentially, they're investing in their long-term future and helping to double down on the growth of the space. And just to give you a sense of the velocity at which Coinbase has been investing, I wanted to drill in a little bit more into our platform. So let's take a look at their deals in Q3. So here we are on the CB Insights platform. Up here in their search, I'm simply going to type in Coinbase Ventures, go to their investor profile, and I'm going to scroll down to their transactions. And here I'll toggle from annual to quarterly. As you can see, if you select Q3, this bar is a huge increase from prior quarters, right? Clear inflection point. And you can see all the deals that happened in Q3. Company round, amount, co-investors. And as you can see, a lot of these players are early stage. In fact, Yellow Card, a Nigerian-focused crypto exchange based in Atlanta, actually, is focused on building a Pan-African crypto platform. And it's actually taking a page out of Robinhood's playbook and enabling users to buy Bitcoin, ETH, and Tether with 0 fees. So just another example of how companies are trying to innovate and try to stay on top of the competition, as well as strike this collaborative approach. But let's zoom back out on the same ventures chart, broken out by quarter, which you can see here. Yeah, clearly the inflection point has happened. Coinbase has invested so much money and so much frequency into crypto. And so we expect this to continue. And it's just an example of how Fintech is rapidly exploring and kind of growing. All right, let's move on to the next component, which is the risk-on environment drives a flood of capital. So obviously VC's share of deal activity, if you just look at the past several years, deal activities remain relatively stable, hovering around 30%. The next most active investor group is corporates and CVCs, with about 15% of deal share this past quarter. And what's fascinating is that over the past several quarters, starting in Q4 2020, the share of deals with participation from asset and investment managers has steadily expanded to the highest level on record. In Q3, this investor class participated in 13% of all deals, which may not seem like that much, but that's actually a 5% percentage point increase from the same period last year, right? And puts it right in contention with corporate and CVCs. A number of traditional public-focused funds are making the crossover into private markets as startups remain private for longer and as investors are looking elsewhere for higher yields. Most notably is Tiger Global, and it has yet again topped the league tables as the most active investor by company count. Here's an example. Tiger Global, as you can see here, 24 company counts, invested in 24 companies this quarter, followed by Coinbase Ventures with 22 that we just spoke about. So these are two non-traditional investors that are rapidly deploying capital and spreading their bets. In addition to these newer entrants, all the usual suspects continue to allocate capital into Fintech as well. GFC, SoftBank, Excel, Sequoia Capital, Andreessen, Ribbit, and Lightspeed, they're all still engaged in the ecosystem and still placing money. It's just that you have new entrants that are adding to this competitive landscape. And this confluence of activity is ostensibly driving up the deal terms of new rounds, as we'll see on this next slide. So far in 2021, the average deal size across global fintechs have soared to a new peak of $32 million. For comparison, this figure for all of 2020 was 18 million. That represents a 78% increase. And median deals have also grown gradually as well. In 2015, it was $2 million. Today, $5 million. And so although the distribution is skewed heavily towards the upper end of the range, deal sizes are growing across the board. So not only are deal sizes getting larger, but so are the valuations accompanying those rounds. We saw median valuations grow across all deal stages from early to late stage. Late stage companies experienced the largest absolute change in valuations, growing from $926 million in 2020 to $1.5 billion in 2021. And that's the midpoint, right? So every company at the midpoint is a unicorn. And so, however, on a relative basis, mid-stage companies saw the largest valuation step-ups, which grew 144% from $196 million in 2020 to a whopping $478 million in 2021 so far. And kind of as expected, the number of unicorn births in the last few quarters have far outpaced historical figures. Over 60% of all fintech unicorn births occurred in the last 4 quarters. And that's including the 43 births that happened this quarter. And globally, the fintech unicorn herd has grown to 206 and is a number that we expect to continue to grow. Here's a look at some of the quarter's most lofty valuations. A few themes have emerged. In crypto land, we have FTX, crypto derivatives exchange, backed by a number of smart money investors, including Sequoia Capital, Lightspeed, and Ribbit, FalconX, and Blockstream, both of which are making digital asset transactions much more frictionless. And we also have capital markets and wealth as a theme that's emerging. So iCapital Network, which is reducing the barriers to alternative assets, as well as DriveWealth, that's helping fintechs and financial services providers embed digital broker capabilities. And then, of course, payments. So Zeeps, formerly known as WorldRemit, also raised at a $5 billion valuation, and Bharat Pay, based in India, at a $2.9 billion valuation. But what if you wanted to discover what companies in fintech could become a unicorn in the next 1 to 2 years? What I like to do is show you kind of what we could look at on our platform and how you can kind of ideate around this question. So right here is our fintech expert collection. This is a curated collection of the companies our analysts are tracking. We can look across all these different regions, but we're going to look at the US for this example. And so, in addition to fintech, we also have collections around payments, banking, blockchain, lending. And so for all these companies, you can see all these different attributes. We're going to navigate over to the latest valuation. You can filter by min and max. We'll input 500 here to 999 rather. And so these are all the companies that are in the range, right? And to further whittle this list down, we can go to Mosaic score, which is essentially our FICO score for companies that tracks company health and sort in descending order. So Blue Vine tops the charts here. Companies like Credit Sesame, Plastic, Notarized, Truebill. These are all companies that have raised within just shy at a valuation shy of $1 billion. But gives you a sense of the types of companies you can kind of expect to get this major milestone. And an interesting cut of this data could be to look at Series A companies, right? Earlier stage companies that are raising at these big valuations and just seeing what they're doing. All right, so let's move on. Next, we're going to talk about fintech playbooks and how they're borderless. In Q3 21, the US drove the bulk of overall funding and also saw the largest number of deals. But from this chart, it's very clear that activity is present across the globe. Of course, Asia and Europe are continuing to grow as fintech hubs. Notably, Asia had 5 consecutive quarters of deal growth to reach an all-time high in Q3. Some of the top Asia-based equity deals this quarter went to flourishing business models focused on enabling merchants to accept digital payments, right? Barhop Pay, Pine Labs being two examples. And then digital insurance providers like Digit, and embedded payments provider Neum that is focusing on rapid real-time payouts right across the globe. It turns out the pain points in financial services aren't all that geographically isolated, and a growing number of startups are retrofitting solutions within local contexts and gaining traction. As we saw in the last slide, the US dominates in funding and deals, but if we look at the share of deals by geography and stage, there's a slight nuance that kind of emerges. Sure, the traditional hubs still dominate, but at the earliest stages on the left side of the screen, US only accounts for 35% of all early stage deals. That's compared to 40 at the mid stage and then 39% at the late stage, right? So about a 5% drop. 7% of all early stage deals, the highest across any of the stages, comes from the rest of the world outside of the top 5 markets. And so what this is illustrating is that the top of the fintech funnel is becoming increasingly diverse geographically. And not only are the share of deals to non-traditional geographies growing, but funding is also growing alongside that diversification. In Q3 21, on the far right side of the screen, fintech is in all other regions accumulated $1.5 billion in funding. And while that's not really that impressive on its own, relative to some of the numbers that we're seeing across other regions, this represents a 150% increase quarter over quarter, right? Which is no small feat. And so more capital is flowing to non-traditional hubs of fintech. And that's really promising for how fintech playbooks are extrapolating across the world. And to put this in more context, let's take a look at Stripe's strategy map. The payments darling's mission is famously to increase the GDP of the internet. And it's putting its money where its mouth is. It's invested and even acquired a number of startups in emerging markets. In particular, in Q3, Stripe invested in Senegal-based Wave. It's a mobile money provider focused on sub-Saharan Africa. And that actually represents the company's second investment in Africa after acquiring Nigeria's based Paystack. And so Stripe is able to accelerate its entry and foundation in new markets by partnering with companies that have complementary business models and local expertise. And elsewhere in the world, Stripe is also invested in payment infrastructure startups, including SafePay in Pakistan and PayMongo in the Philippines. Mexico-based Cuenca in LATAM, and we'll talk more about the region in the next slide. So LATAM is having a moment as well. You may have seen recently that Nubank, a poster child of the region, recently announced its bid to go public, targeting a $50 billion valuation. This quarter, LATAM deal activity continued to stay elevated, despite funding halving after last quarter's outlier performance, right? There's a huge increase in funding last quarter, but certainly an outlier. But over the last several quarters, deal activities remained high. In Q3, there were 73 deals to the region. And just to give you a sense, let's look at the top deals in the region. Number one on the charts was Mexico-based Kavak, led the pack as its used car and financing marketplace continues to resonate with consumers and borrowers. It raised $700 million in Q3 at an $8.7 billion valuation. That's double that of its last raise just 5 months ago. Other top deals include Argentina-based challenger bank Walla, crypto exchange Mercado Bitcoin, payment network CloudWalk, and digital identity provider Unico. And notably, 6 of the top 10 deals, which are not all pictured here, but are in the full report, in LATAM went to companies based in Brazil, a major contributor to the growth in the region. And so we'd love to just dig a little deeper into what's happening in Brazil and show you on our platform the types of companies we're seeing. Okay, so here I have a company search pulled up for all the companies that match both fintech and also location where in Brazil. And this is not specified for just Q3, but you have the option to specify that. In Dossier, you can click and just pre-populate an entire report that shows all the activity that's happened within this data scope. So you can see here, top investor tables. So who are the most active investors within Brazil and in fintech? As you can see here, Kazakh Ventures and Menashe's both top the charts, having invested 55 and 40 deals across the past several years. And it just so happens that Kazakh Ventures invested in Justo, a Brazilian insurance company that uses telematics data to personalize rates based on risk scores, right? Really reminiscent of companies like Root and Metromile, which just recently got acquired by Lemonade, and is just another example of how fintech playbooks are gaining traction in newer markets, right? These aren't new ideas, they're just being applied in new markets. And so in summary, fintech is eating the world. The competitive landscape is really driving a surge in deal sizes and valuations. And finally, expect to see fintech continue to extrapolate across the world as these playbooks are borderless, and as fintech value propositions continue to resonate across the world. And so that brings us to the end of our presentation. We can open up for questions. Okay, let's take a look. Yeah, so what are some of the interesting, there's a question around activity in Africa. One of the deals that I definitely wanted to highlight here was Wave. It raised a massive round and is taking a different approach to, this is kind of a great example of like local markets and having tailored approaches to penetrating these markets, right? And so in sub-Saharan Africa, the telecoms really dictate a lot of how the financial services are administered. And so you can actually be charged for just checking the value of a balance of your bank account, right? And so what Wave is doing is realizing that this doesn't really work for a lot of people, and they are bringing those fees down to zero, which we've seen time and time again across fintech. And they're essentially using agents to make those withdrawals and transactions a lot more frictionless, right? And so they're improving on the existing model, and they're going after the telecom structures. And so really interesting company to keep an eye on. Africa's got a ton of potential. And yeah, that's definitely something exciting to keep in mind. A couple of other questions. Okay. So what's causing what's the cause behind the LATAM Q3 outlier? So this is going back to this slide here. Sorry, a little glitch over here, but so that new bank raised in Q2 as they're ramping up for their IPO. And so they contributed a pretty significant amount of funding to that outlier figure. To dig into the platform more to find that out, exactly which other deals may have been outsized. What I typically like to do is just look at all the $100 million rounds that happened in that quarter to kind of figure out what's actually driving those numbers. But certainly Nubank raised, I believe, a $700 million round. And so it's a non-insignificant amount there. Just going through some more. On page 18, are you talking about just VC funding or M&A deals? Page 18, those are just VC fundings, right? And so this deal's methodology is looking at just equity transactions. There's a separate part of this report that focuses on M&A and exit deals. So you'll see the number of IPOs, SPACs, as well as M&A transactions. I can say that M&A deals were by far the most popular. and most active exit transaction type. But yeah, definitely encourage you to take a look at the full report. You'll see kind of a deeper dive across different sectors as well. So across banking, payments, S&B. I think we have time for a couple more. Focusing in on consumer credit players. Yeah, there's a question around kind of, whether this market is a winner's take all, kind of speaking of consumer credit first, but this kind of applies more broadly to fintech. I think what we're seeing now is that fintech is so much bigger than we imagined, and kind of to the point that fintech is borderless, and to the point that we talked about Stripe's strategy map, and how it's increasingly looking more and more diverse from a geographic perspective. Because there are no more of these borders, and because there's now a way to reach these customers, the market opportunity and the TAM is way bigger than we ever imagined, right? And so I think, while yes, there may be a few players that take the entirety or bulk of a market, I don't think that's played out just yet, right? I think fintech is still unraveling and still really showing where it's going, right? And that's to ignore the fact that you have decentralized and DeFi players coming up as well, which we'll cover in our blockchain state of webinar. And so there are certain markets that I think are more competitive than others. Credit is definitely one of those places, and banking as well, as we're seeing some of the earlier European players that are struggling to penetrate into the US market. But again, I think with the restructuring of the infrastructure, with embedded finance coming into play, I think the market just gets so much bigger, right? And so less worried about the winner take all mentality, but how do you penetrate those markets effectively? And with this record level of funding, I think that's definitely something that there's a lot of runway for, and that we'll be seeing a lot of in the future. But yeah, I think that kind of wraps up all the questions. I will pass it back on to Madison for.
Thank you so much, Oliver, and thank you to our audience for joining us and submitting all your questions. To reiterate, we will be sending the slides and the recording within 24 hours. And if you're interested in doing a free trial of the platform that Oliver showed today, of our platform, click on this link that I'm now sending in the chat. Give everyone a couple of seconds to click on that. But apart from that, I think we're good to go. So thank you so much and have a great day.